Hello, this is Eric Parnell, Chief Market Strategist from Great Valley Advisor Group, and I'm here today to talk to you about the number one downside risk for markets as we go through the second half of the year, and that's the potential renewed rise in inflation. Now, we got some really good news about the July inflation reading here last week. Not only did the year-over-year number come in softer than expected, but the month-over-month data actually was slower in terms of the rate of inflation than we saw in previous months. That was really good news. Doesn't mean that we're out of the woods quite yet, however, as there are several indicators that we should watch as we go through the second half of the year to see if we start to see a renewed rise in inflation. The first indicator that we want to watch is the break-even inflation rate. That's basically investors' expectations about inflation. Now, that has been softening going all the way back to March 22. But if we start to see a renewed rise in inflation expectations, that could be a leading concern that suggests that inflation could be steadily on the rise. The second indicator that we should be watching is the producer price index. That's the cost that producers have to spend in order to produce the products that we all buy. Now, the good news here is that the producer price index has actually been falling at its fastest rate since the 1930s. As long as that continues to stay low, that's a good sign on the inflation front. A third indicator that we want to watch has to do with the economy itself. Now, we only get the GDP number quarterly, but there are a variety of indicators that we can use to get a sense of how the economy is doing at any given point in time. The latest is the retail sales number, which came out this Tuesday. That number came in much hotter than expected, suggesting that consumers remain strong and resilient. It may sound like good news, but that's actually bad news on the inflation front. So one of the things we're going to want to watch in the months ahead, are we seeing signs of the economy gradually slowing and keeping inflationary pressures in check? A fourth indicator we should be watching is commodity prices, and this includes the price that you're paying for gasoline at the pump. If you notice that oil prices are going up when you go to fill up your tank at the gas station in the months ahead, that's a sign that inflationary pressures are building, potentially not only on a headline basis, but also at a core level as well. These are just a few of the key indicators that you should be watching on the inflation front as we go through the second half of the year. Thanks for joining me for this latest Market Insight, and I look forward to seeing you again soon.